In this video, we're going to talk about how do you find a pattern? Like I always, say, look, I make all this money off patterns. How do you actually find them? In this video, I'm going to explain how. What's up, Tim Sykes, millionaire mentor and trader here today talking about patterns. If you know me, you know I love patterns. I profit more times than not off predictable patterns. Dip buying, morning panics on recent supernovas, shorting the first red day on recent pump and dumps, and buying the first green day on ideally a former runner or an OTC with big volume, with big catalyst. These are my three favorite patterns. But how do you actually find them? Before I begin, let me ask you a question. Do you want to be profitable? It's a very simple question, but leave an answer yes or no. It's okay if you want to say no. I know some people get into trading. You'd be surprised not to make money, but just to challenge themselves. Some people get into trading because they want to lose, because they have psychological problems, because they have mommy and daddy issues and they need to punish themselves. I'm not a therapist. Consult a therapist if that's you. For me, I just wanted to be rich. I'm Jewish. Money is in my blood. I'm greedy. I wanted to make money, so I got into trading. At first, I actually got into investing. But leave a comment seriously below. Do you want to make money? Do you want to be profitable in trading? Yes or no? It's a very simple question, but the more times you say yes and you submit yes and you say yes out loud, the more times you're actually going to start to believe it. And then when you believe it, you're going to actually do what it takes to become profitable, which namely is studying. This is why I have so many guides. If you ask me what is my most comprehensive guide, I'm going to post a link below this video. It is called How to Make Millions. It is 35 hours. It all goes to charity. So if you hate me, if you hate the fact that I make money from teaching, buy How to Make Millions. That way you get all my lessons. I don't make a dime. It all goes to charity. It's become my best-selling DVD because so many people hate me, but they still want to learn. Cheers, guys. It's okay if you hate me. I would hate me too if I wasn't me. I live a fucking amazing life. But it all comes down to these patterns. Those three patterns are my favorite. How do you actually find new patterns? I'm always looking, okay? Even though these are my three favorite patterns, I'm still always looking for new patterns. I'm testing and I'm trying to see, wait a minute, even if I don't actually trade a stock, I'm forming a thesis. I think that you should also use this software. I'm going to post a link to this software just below this video called Stocks to Trade. It has paper money, which is like fantasy cash, and you can basically buy and short stocks without risking any real money. That way you can test different strategies, different patterns. This is what you have to do. You have to think of yourself as a scientist. You're making up different experiments and you're forming a thesis, and you say, okay, this company just, for example, this company just had a reverse split. I noticed that sometimes when reverse splits happen, the stocks can spike because now they're a new price. People don't necessarily recognize the new price. They don't realize that when a company does a reverse split, it's because the stock is down so much and now it's traded so low, they need to actually do a reverse split just to get it trading higher so that they don't get delisted from whatever exchange. It's the worst of the worst companies do reverse splits. But when they have a new ticker, or when they have a new price, the past is kind of wiped out on many charting programs and in a lot of traders' minds. So reverse splits can spike. So let's say you have that as a thesis. And I've seen this. I wouldn't say this is a great pattern, but it is a pattern. So start looking for reverse splits. Start saying, hey, this company has a reverse split. I'm going to watch it over the next week. I'm going to buy it in my Stocks to Trade fantasy cash account and see how it does. And then if you do well on that one, look for the next reverse split. Then maybe look for upcoming reverse splits and trade them in a fantasy account, or maybe even with real money if it's working. You can take small positions. You can buy 100 shares. You don't have to buy 1,000 or 10,000 shares. You can modulate your position size and you test different patterns. Maybe you don't like reverse splits. Maybe you want to get into short selling. I like shorting the first red day, but maybe you're not going to wait for the first red day. If you know about shorting and you know about the first red day, there might not be shares to short. So now, let's say you have to anticipate shorting the first red day. So now maybe, how many days can a pump and dump spike before the probable first red day? So let me take a look and look at a recent pump and dump. Maybe on the fourth green day, I'll just start shorting and see how it does. Short one pump and dump on the fourth green day. See how it does. Find another pump and dump. And pump and dumps don't happen all the time. It's not every day. You can't just like practice 10 times a day. You have to wait for the plays. But identify a pump and dump. Look for stocks that have been promoted on TV, in newspapers, on social media, in emails. Thanks to boiler rooms, there's many different pumps. Wait for it to spike 3, 4, maybe 5 days, or look and see like how much of a percent. Maybe a pump and dump is up 100%, and that's the magic number. So start looking. When does a pump and dump usually, turn around? You need to start thinking whether you're going long or whether you're going short. Form a thesis, look for the pattern once, wait for the pattern to happen again and again and again, either paper trade it or trade it with a small position and see how you do. Keep meticulous track. You are a scientist. Even if you find one great pattern that works, that doesn't mean that you should stop looking for other patterns. Always experiment. The key is adapting. I'll give you a story. Back in 1999 and 2000, I made roughly a little over $700,000 as a freshman in college and senior in high school. I was buying pumps into the market close, selling the next morning. That was it. I had one strategy. And I didn't know that they were pumps at the time. No one had revealed boiler rooms or anything. I just recognized penny stocks breaking out to new highs. I would buy it into the close, like at 3:50, 3:55 p.m. Eastern, and then I would sell it the next morning at 9:31, maybe 9:33 a.m. Eastern. And I would make 5, 10, 20%, even if the stock would go up 50 or 100%. I saw this pattern. It worked again and again and again. Usually stocks that were breaking out to new highs, the most actively traded penny stocks, hitting new highs, ideally with a catalyst. Back then, the easiest pattern to spot was when a company added .com to their corporate name. That's it. They just added .com to their corporate name. The stock would spike 20%. People would see the press release overnight, and the stock would spike another 20 or 30 or 50% on day 2. And then another 20, 30, 50% on day 3 or day 4. That was my whole pattern. And then it disappeared. When the NASDAQ crashed in early 2000, there were no more breakouts. I made, I think, $730,000 the first 4 months of the year 2000. I lost $10,000 the last 8 months. It was a desert, okay? It was like the day the dinosaurs died, and there was nothing. There was a giant meteor that hit my pattern, and it was obliviated. That was okay, because first of all, it was sad. I didn't know about adapting. I didn't know what I'm telling you right now. I never had a teacher, remember that. But it forced me to adapt. And I learned back in late 2000 and early 2001, why were these penny stocks spiking so predictably? That's when the SEC started, exposing boiler rooms. And the reason why the companies that I were buying would gap up the next day, because boiler rooms were calling random people at night, at dinner time, because that's when they're most likely to be home. And they were pitching them over the phone at dinner, the whole penny stock BS scheme. And people didn't know that it was a scheme. They believed it, and they would buy. There was no pre-market trading back then, so all the buys would, basically stack up at the market open. The market makers would gap the stock up. That's what I was doing. I was inadvertently piggybacking pumps. I had no idea, no one had any idea, but I would recognize the pattern. When that disappeared, when there were no more breakouts, I was forced to short sell. The good news is I adapted, and I began making money on the same exact pattern, but later in the pattern. If there's a pump going up and then the dump comes later, I made basically my first million buying the pump. I made my second million basically shorting the dump. Because the pumps weren't working anymore, I had to find something new. Picture yourself like an animal looking for new food sources, okay? This is it. You're looking for new greens. It's good to eat your greens. It's good to make greens. So where do you go? You try different things. I was very fortunate that I adapted. A lot of people made a lot of money back in 98, 99, 2000, but they lost it all in 2001, 2002. I lost 10,000 out of 700,000, a very small amount, because I wasn't trying a whole bunch of new patterns and new strategies with big money. I was testing with small money. That's what you must do. Even if you have a pattern that makes a lot of money, always be testing, looking out for different things. That way you can have something, in case your one pattern dies off, you have something else. Ideally, you have 2, 3, 4, maybe even 5 main patterns. And the good news is there's not an unlimited amount of patterns. So if you learn a few key patterns, they usually come back into play again and again. That is the lesson. Learn patterns, always be adapting, never surrender, never be content with just one pattern, never be content with how much money you have. Always learn to adapt, and that way the future is yours. Hey, Tim Sykes, millionaire mentor and trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.